Assalamualaikum and a very good day we wish to our lecturer, Sir Muhammad Shafiz bin Saharan. So this is our presentation regarding benefits and functions of insurance. Our team consists of 5 members, introducing to you Muhammad Aiman bin Azman, Intan Suhaila binti Zulkafli, Uminur Syafiqah binti Hasan Basri, Nur Aina Liana binti Azmi, and me myself Nur Farah Izzati binti Mahyudin. So this is the table of content that what we will go through later on. We are going to explain and present to you the definition. How it works is basically the function of insurance, what are the benefits, and what can be concluded from our presentation based on this topic. So without further ado, let's start.
Insurance is a legal agreement between two parties, which are the insurance company or insurer and the individual or insured. In this, the insurance company promises to make good the losses of the insured on happening of the insured contingency. The contingency is the event which causes a loss. It can be the death of the policyholder or damage or destruction of the property itself. It is called a contingency because there is an uncertainty regarding happening of the event. The insured pays a premium in return for the promise made by the insurer.
Assalamualaikum, my name is Muhammad Aiman bin Azman, and for my part, I'll be talking about the primary function and indirect function of insurance. So I'll start with the primary function of insurance. Primary function of insurance is to act as a risk transfer mechanism. Insurance act as a risk transfer in exchange for protection, pay sum of premium to the insurance company, and transfer the responsibility of loss or damage to the insurer. Primary function of insurance basically help in terms of first one is providing protection, which is to provide protection against future risk, accident or any uncertainties. Next one is collective risk bearing, which is whenever the loss happen will be shared among those who are exposed to the risk and not only be backed by only one individual whenever the losses happen. And the next one is by evaluating risk. By evaluating risk, it helps to reduce or eliminate the cost of loss caused by different types of risk. And lastly is to provide certainty by providing certainty of payment at the uncertainty of losses whenever the losses happen.
Moving on to the secondary function of insurance. First and foremost is release funds otherwise tied up in reserve. Insurance allows businesses and individuals to avoid the need to freeze cash in order to offer financial protection against losses. As a result, insurance provides a way of stabilizing costs associated with risk management through the payment of premiums in exchange of compensation in the case of a loss. The newly created fund will be open for investment. The next secondary function of insurance is stimulated business enterprise. Insurance risk transfer mechanism enable and assisted in the maintenance of today's large-scale industrial and commercial enterprise. Such big-scale firms could not have begun without passing a major portion of their risk to insurers. Insurance also boosts business in a variety of ways. It makes property financing easier for banks and other financial entities. It also helps international trade. In addition, a secondary function of insurance is can reduce fear and worry. Insurance gives businesses and people peace of mind by relieving their anxieties and concerns about potential losses. The reduction of anxieties and worries aids in the establishment of confidence and allows for the forward planning of economic activity. Furthermore, reduced losses also is the secondary function of insurance. Insurers have experience managing risks and making recommendations to improve them. This is due to the fact that insurers' day-to-day operations expose them to a wide range of risks and loss kinds. Through their actions and suggestion in rating, survey, inspection, and salvage activities, insurers assist to limit both the incidence and severity of losses. Both the insured and the insurer will gain from this. Other than that, it is also encourage saving. In addition to protection, insurance acts as a means of committed saving, especially in the case of endowment insurance. The investment component of these sorts of insurance contract is a form of savings, whereas the protection components offers compensation in the case of death or permanent disability. As a result, the insurance offers the insured with both protection and savings. Last but not least, it is also offers social benefits. People in society are exposed to a variety of personal hazards as a result of their accidental death and unemployment, handicap, and so on. Such incidents cause a major financial burden for the man and his dependents. In such cases, insurance is seen as an efficient means of mitigating such a societal problem. In this case, insurance offers financial compensation for damage incurred as a result of such accidents.
Okay, the next one is the indirect function of insurance. Basically, there are three functions under this indirect function. The first one is the investment of funds. Investment of funds offer a convenient and effective way of providing for the future. To put it in a simpler term, it helps us with our saving in the future. Through the investment made, it helps us to earn interest or profit whether you are in the public or private sectors. And next one is invisible exports. Invisible export is any services provided by residents of a country which causes the money to come into the country, meaning that a resident of a country can provide any type of services as long as it helps the country to gain income or money from it. For example, tourists that visit Malaysia can apply for medical tourism, which includes insurance coverage to protect them against losses while travelling. And lastly is source of employment. Insurance industry has generated numerous employment opportunities, meaning that they are helping those who are still unemployed to work inside the insurance industry. Therefore, whoever are still unemployed are able to apply for the to work in the insurance industry, and it doesn't matter whether they are in the same course or different course from the insurance industry. An example of job scopes in the insurance industry such as underwriter, loss assessor, examiner, and investigator.
So the first benefits of the insurance is peaceful mind, which the business can transfer the risk to insurer. There are three important things to individuals, industry, and commerce. For the individuals, such as car and house, medium-sized and larger firms sometimes having an emergency such as fire and theft, but the rate of interest will be much less than the normal rate. Next is loss control, which is loss control entails recognizing hazards and recommending optional or mandatory steps that a policyholder might take to decrease risk. Loss control schemes can save policyholders money by lowering premiums, while insurers can save money by reducing claim payouts. And the last one is like invisible earning, which is the insurance you thought was completely useless has to come to your aid. It used to be invisible, but not any longer. Insurance will cover your loved ones' medical bills as they recuperate and get back on their feet. Insurance is like invisible money. You can't see it all of the time, but it will always be there when you need it.
Conclusion. From what it is stated, it can give exposure to the listener the importance of having insurance. Having insurance for everyone with a human title is very important. This is because we cannot predict the future. If today we have a large amount of saving also, it cannot guarantee that we can use that money if we are diagnosed with a chronic illness one day. This situation can be likened to a high mountain. When directed over time, it will become flat. In conclusion, it turns to the
consciousness of the person in planning and making preparation for the future.